At Staples Business Advantage, our team of experts can help you find the breakroom products to satisfy everyone's preferences, while AI can
suggest popular items, monitor stock levels, optimize pricing, and automate reordering.
AI can do a lot of things.
But I can never know the taste of a truly great cup of coffee. Sigh.
But you also can't get hangry.
This is true.
Let Staples Business Advantage use today's latest innovations, plus our team's experience, to make stocking your team's breakroom easier for you.
Sign up today and save 20%.
Staples Business Advantage.
Business is
human.
Shares for beginners. Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation.
The way I see that, we've got three main financial objectives. One is to cover the now. We've also got the future, so we need to plan for that, and that also, part of that includes retirement. And then there's a third, which is planning for the unexpected. Of course, the only relevant goal seems now, but we need to think of the other two, because at some stage they do happen, and if you're not prepared, there's a lot of pain involved. So we need to balance between all three. And so inevitably, because of that process, you get this big pot of money, and it's really tempting to access. But it was never designed for that purpose. Housing in Australia has some real challenges. One of the big factors is the supply side. Releasing super for housing just increases the demand side, and it wouldn't be a solution.
G'day and welcome back to Shares for Beginners. I'm Phil Muscatello. It's not a competition, but who has the best retirement system on the planet? How do other countries look after their oldies so they can run down the beach in white linen like you see on the brochures? Joining me today to discuss this and returning guest is David Scollon. G'day, David.
G'day, Phil.
Thanks very much for coming back in.
Great to be here again.
So David is a senior consultant for JANA Investment Advisors, and that's really at the big end of town, isn't it? And the author of Mission Possible, which we spoke about last time, 4 Steps to Financial Independence on Any Income. So part of David's role is researching the 2 big topics of retirement and sustainability. As part of this role, he recently researched the retirement systems of various European countries, meeting with pension funds, asset managers and consultants. He also attended the PRI conference in Barcelona. So let's start off by talking about JANA Investment Advisors. What do they do and what do they mean to listeners of this podcast?
Yeah, terrific, Phil. So JANA is what we call an institutional investment consultant. Yep. So we help institutions navigate the whole topic of investments. So typical clients could be charities, endowments, universities, the big super funds, insurance companies, and even advisor businesses and licensees turning to JANA for sort of more of an institutional offering. We focus on the investment side, and that could be across where to invest, which asset classes, and also the topics like regulation, sustainability, retirement. The way I liken it to is, just like an individual would get an advisor, institutions get investment consultant. And what it means to the listeners is that the ultimate beneficiaries of our clients is everyday Australians like you and me, Phil, and so we're very conscious
via our super accounts.
Yeah, exactly, yeah. And in endowments, charities, universities as well.
I mentioned before about the pension funds, asset managers and consultants that work in this area around the world. And these are all in pension schemes, and they're very similar but different to what we call super in this country, aren't they? Yeah,
I mean, you can summarise the 3 major parties within in any investments is the asset owner, so like a super fund, they're investing the money. Then you've got asset managers who actually invest the money on behalf of asset owners.
Yep.
And then you've got asset consultants that guide around how to allocate and percentage allocations and all the regulation.
And so the JANA is one of those.
Yeah, JANA's a consultant. And now that sounds like, well, it's 3 parties, but investing is it's complex.
Yeah.
When you start to delve into it, there's a lot of complexity around it, and hence the need for different parties doing their area of specialisation.
So why did you go to Barcelona for the conference?
Yeah,
was it for the tapas, or there was actually important things to do?
Yeah, well, it's a convenient location. It's great tapas there. The PRI conference is the PRI stands for Principles of Responsible Investing. It's a United Nations backed initiative to bring all the institutional investors around the world together, and to really navigate the topics of sustainability and responsible investing. So environment, social factors, and to work out how to navigate that topic. First time together since 2019, and there's about 5,000 signatories, and there's about 2,000 in person, and also others online as well.
We were talking off air just before we started the tape rolling on this about sustainability and about issues and the things that were brought up at the conference. And you were mentioning that ESG is not that well understood, but part of it is, are you going to invest in an airport, for example, that is going to be flooded in maybe 10 or 20 years' time? Is that part of the things that you're looking at when you go to a conference like this?
Actually, you've raised a couple of points there. So on the topic of the whole area, it can be misunderstood. I don't think the industry has done itself any favours by lots of different terminologies that can be confusing. But I mean, ultimately, it's looking at recognition that for sustainable returns, you need a sustainable world, and investments have impact. And so we need to be clear on what the impact is and how to ensure a sustainable world as well as returns. In terms of the topics at PRI, lots was discussed. It was actually sandwiched in between the COP27 that was held in Egypt and that covered climate, and then it was held just before the COP15 for biodiversity, which was held in Montreal, Canada. And so that was a lot of the topics discussed. And also just the regulation that's going on around the world, things like the Inflation Reduction Act in the US that the Biden administration announced, and which is very significant in terms of the impact of where money gets invested and the whole area of sustainability. And then we talked about the risks of greenwashing and impact of investments as well. So a lot discussed.
What was the things that you found the most interesting? What were some topics that just sort of stood out for you?
It's interesting, the different jurisdictions and what they're dealing with. So Europe, this whole topic is much more integrated than other parts of the world, particularly some parts of the US. There's a lot of debate that goes on in the US about the whole area. It's always quite heartening actually to get into an environment like that where there's actually a lot of really smart, good people that are trying to work out a lot of solutions. So it's quite encouraging to know that there's a lot of good work is being done. Which is always good to see.
So you've done some research around retirement. Can you explain what's so complicated about retirement and why you need to research it?
Yeah, sure. So actually retirement was labelled by a Nobel Prize winner as the nastiest, hardest problem in finance. And there's good reasons for that. One of the factors with retirement is when you go into retirement, you're effectively switching off your ability to earn an income. Yeah. And then relying on age pension, a combination of the age pension and your savings. Yeah. And that's challenging. And to give a perspective on that, if you can imagine that you were planning to take a year off from earning an income, for whatever reason, you wanted to do some study or raise a family or go traveling. And you can imagine the amount of work and planning and saving that would be required to do that for 1 year. Retirement's sort of like that, except you're doing it for multiple years. And in some cases for decades for some people. There's a lot of unknowns associated with that. So some of the unknowns is the fact we don't know how longevity. We don't know how long we need income for. We don't know how the markets are going to play out, the sequence of returns each year. We also don't know the inflation ahead of us and how costs will increase. And then lastly, we also don't know what the big lumpy costs are out there. So, for instance, health issues or aged care costs as well. So altogether, that makes it pretty complex. But there's actually some good news because there's a lot of work in terms of design around products that help navigate those unknown factors.
So these kind of factors are being taken into account in planning pension or superannuation style products. Is that the case?
Yeah. So in Australia, there's a requirement now under the Retirement Income Covenant, a bit of legislation where funds have to provide a strategy that maximises income, manages those risks that I talked about, all those unknowns, and then also provide flexibility so you can access the money if needed for lump sum costs. And that was part of the reason for the research and going on this research trip and seeing how other countries are doing it and navigating the whole area of retirement.
So tell us about these 4 other countries that you visited and their systems.
Yeah, so we looked at the UK and then also Denmark, Netherlands, and then Germany. Yeah, it was really interesting. I think some of the interesting takeaways workouts were that the challenge is universal. So it's, all areas are trying to navigate it. The other thing was actually how good Australia is placed. It was interesting. We had, say, 30 meetings, and often whoever we were interviewing or meeting with would suggest that, it should be reversed, that they should be asking us questions because of the success of the Australian system. The other interesting thing, I think, is just trying to get engagement from members, which is really tough because you can have the best system, one of the best systems in the world, but if people don't trust it, then...
So what do you mean by engagement with members? What, people whose money they're putting into the superannuation fund? Is that what you're talking about?
Yeah, so engagement with the actual beneficiaries of the super fund.
Yeah.
Because you can have the best system in the world, but if the
people will still whinge about it.
if beneficiaries don't trust it, then, it's no good having a really great system because they'll go off and do their own thing. And that's not always a great outcome because, you're more vulnerable to bad investments, to scams. Yeah. Whereas, we've got a good regulated system that is there to provide income in retirement. The final big takeout was the onus on the industry to have really good design around retirement solutions so that people can trust it and sort of, I guess, enjoy their retirement knowing that they are being looked after.
Can you give us some specifics about any of these other systems? I mean, which one would you like to talk about? UK, Denmark, Germany?
It was interesting. So Netherlands and Denmark are actually ranked very highly in global pension systems, so just above the Australian system. And there's a real, trust, much more trust in the system. Yeah. There's also, I guess, a lot of pooling of risk as well, so that they've got what's called like a modern tontine system generally. If you pass away, your pot of money goes into the bigger pool, and that goes out to the surviving members. And there's
of your family.
Actually, the surviving members of the fund.
Oh, okay. So it doesn't get passed on to your beneficiaries.
The portion you put in into that pot doesn't. And it just goes to the bigger pool. Oh, and culturally, they're used to that. Wow. And they're comfortable with it.
Yeah. Wow, that sounds like a death tax almost.
But
that's the way we'd be characterised here in Australia, though, wouldn't it?
That's right. I mean, this is the challenge of retirement, because of getting people across sort of some of these ideas. But
it's an idea. The idea is that it's for the greater good. This is something that the whole of society benefits from.
Yeah, well, it's a way of dealing with that item I mentioned, longevity.
Yeah.
So when we don't know how long we're going to need income for, you need a solution that will cater for that. And one approach is to pool money, and so that those who survive, they still start to receive an income. Those who don't, they don't have the ongoing need for income. So that's one approach to it. But it points to the fact that the culture of the country is sort of important in how you design retirement solutions. What people are used to, what people think culturally as well. So that was really interesting.
And what are some of the things in our system that they like to look at and admire?
So I think one of the big things is the fact that we have a defined contribution system, whereas they've had a defined benefit, where the risk sits with the employer. And our defined contribution means it's being invested into more growth assets, which is why it's become a really large pot. I mean, it's the third or fourth biggest pension pot in the world, which is pretty extraordinary when you think of our small population. Yeah. I mean, amazing.
And our economy is about the 13th in their GDP, 13th in the world, something like that. Yeah.
And again,
which is still great,
for a small population. And we've been going for 30 years now with compulsory super. And so it's really grown into a large pot. And I think the combination of, government pension plus your personal savings plus your superannuation makes for a good system, which they like.
So tell us about Iceland. How did they score so highly with their pension system?
Yeah, so Iceland's an interesting one. So there are a number of different...
It's such an interesting country on so many levels. But anyway,
I haven't got there yet. So, Iceland's interesting. So there's a number of different indexes for pension funds, and one of them puts the main one, which is the Mercer CFA Global Pension Index, puts it as number one. And that's based on three factors: adequacy of the system, the sustainability of the system, and the integrity of it. Now, we didn't go there. Partly it's super expensive, but also it's less relevant because the population of Iceland's 370,000 people.
Yeah.
So as a wealthy country and with a small population, it's not too big a challenge to pull off having a good retirement system. Not to underplay what they've done there, but we were looking for the bigger systems like Netherlands and Denmark.
At Staples Business Advantage, our experts can help you find furniture that fits any design and budget, while AI can
Recommend products based on preferences, generate 3D models for visualization, and optimize space planning for office furniture.
take advantage of our team's eye for style and design.
And my eye for, wait, I have no eyes, only algorithms.
Let Staples Business Advantage use today's latest innovations plus our team's experience to make furnishing an office space easier for you.
Sign up today and save 20%.
Staples Business Advantage.
Business is
Human.
Super is one of the most important investments you'll ever make. But how do you know if you're in the best fund for your situation? Head to lifesherpa.com.au to find out more. Life Sherpa, Australia's most affordable online financial advice.
You've mentioned to me previously that the Australian system is not perfect but really well placed. Why is that?
Yeah, so I'm always cautious about perfect systems because there aren't any perfect systems, and anyone that talks about there being one, I'd be very cautious with. And we should let the perfect get in the way of the good. But yeah, the Australian system is really well placed, and we've already spoken about the fact that many countries look to our system as being a great example. It does rank highly in these indexes, and that again is because of its adequacy, sustainability, and the integrity of the model. We actually went down a couple notches because during the COVID, partly because of the early release.
Damn you, Iceland.
Yeah.
Sorry.
Actually, partly because and a couple new countries came in, but also the early release was there, which suggests that if you have a system that people can access any time, that does reduce the integrity and the sustainability of the system. And also a lot of the other higher rated countries have higher contribution rates, so like 12% and higher. But the system is really good in Australia, and also there's so much regulation and monitoring of it and improvements on it that it's getting better and better all the time. So And I should add that in the end it's a bit academic of whether you're first, second or third. The fact you're in the top 5 is excellent because I can tell you there's some countries out there that are lowly ranked, or other countries that don't have any system. We're
that's right.
Lucky.
I just wanted to go back to something that you mentioned a little while ago, or a little bit ago in the interview, is about our system invests in growth assets, and that's different to some of the other countries. Can you just explain that a little bit for us, please?
Our system it's been around for a long time. We know that it's what we call sticky money, or it's long-term capital, and so we can invest it accordingly in growth assets and in unlisted investments like property and infrastructure. Some of the other countries don't have that luxury, partly because of really tight fee constraints, and everyone often focuses on just trying to get the lowest costs, but there's a balance there. Having too low costs is really restrictive, and you actually limit the sort of returns you can get. Also, I mentioned Australia has a defined contribution system which allows for more growthy investments, whereas when you've got a defined benefit, you've got a liability that you need to match, and so you need to be cautious around making sure you match that liability, and sometimes caution in investing as well.
So what's that? That's a defined benefit. What is that?
So defined benefit, there actually used to be, some people still have a defined benefit in Australia, but
public servants, mainly public servants, aren't they?
And those that have been around in the public service for a long time, not people entering now. Effectively, it's an agreement of a payment either at retirement or an agreement of an agreed amount in retirement, and they're not really sustainable. So particularly with people living longer and living in retirement for longer. So there's been a move away from that throughout the world.
Was there any talk about France and the raising of the retirement age in France?
No, there wasn't. I mean, of course, it's pretty topical now. Yeah, it's really interesting, particularly given that we know people were living a lot longer. And a lot of people would argue that they want to work longer, and sometimes it's restrictive of how long you can work for, because people want to stay motivated and engaged,
active,
and whether that's working just locally or even pro bono work. People just some people want to be still engaged
and keep their brain switched on.
Yeah, exactly.
Presumably.
Exactly.
Yeah. So we hear a lot about changing demographics in the future that will mean that the retirement system won't be able to support retirement at the same levels that we all enjoy. What are your thoughts on this?
Yeah, okay. So demographics is an interesting one. There's two major demographics forces that are happening that are relevant for retirement. One is, I just mentioned, life expectancy. So we're in retirement a lot longer. I think the stats used to be many, many decades ago that you retired at 65 and life expectancy was 67. So it wasn't a really big stretch to fund retirement.
Just time that by the time you put your feet up, you're putting your feet up.
Yeah. And so much longer now. And the other factor is the lowering birth rate. So what that means is we're getting a smaller percentage of those that are working and paying taxes relative to those who aren't working, and particularly that retired group because they're living longer.
Yeah.
And this puts pressure on retirement systems. And this is a global factor. Again, Australia's pretty well placed because we're not purely reliant on the government pension. We have this multiple pillars of the pension, the super, your personal savings, and even your house as well that you can rely on. Also, Australia's a relatively wealthy country, and the sustainability of a pension system relies on a healthy economy, which we have. And also, we've got a few levers on the demographics. Australia's an attractive place to come to. People want to come here and live here, and so we're fortunate to be able to draw on that as well.
We can import some more taxpayers.
I didn't say that. And also for essential workers, jobs that not everyone wants to do as well, with a lot of people absolutely willing to do and skilled to do those jobs. And I think the other factor is that people growing up today, there's less expectation or reliance on the pension, particularly if you're starting to get superannuation allocation as a teenager when you first start working. I mean, that money is going to be sort of compounded over 40, 50, 60, 70 years by the time, with life expectancy. And so I think there's lower expectations, even though the pension will always be there in some form. I think people are aware that, you don't want to be just purely relying on that.
I always like to find out all the different areas that money can be invested in, and I know I go on a bit too much about fixed income and so forth, but there's also alternative investments. What are they and how are they valued, and is there true value being hidden sometimes in super accounts?
Good question. Just for context, when we talk about alternative investments, there's a few things that fall under that. Some of them are unlisted property, unlisted infrastructure, and private equity. Investments in private companies.
I always like to look at it in terms of the way Sydney Airport, for example, was publicly listed and then went private, and it got into that system. And so normal investors can't access it, but large superannuation funds can. Is that correct? Have I
that's right.
characterised it correctly? Yeah,
so super funds have, because of the scale, they're able to go and purchase big infrastructure or big properties directly. And further context is, there's two main ways we can access these, property infrastructure and companies, is either through a listed exchange like the ASX or directly. And there's pros and cons with both of them, and pros and cons in how we value them. So if you're going to the ASX, one of the upsides is the fact that you get daily values. You know what the value is. The downsides of that is you're vulnerable to the fluctuations of the market. And in extreme cases, when there's really poor sentiment in the market, the value of your listed equities comes down, even though the long-term viability is still just as strong. And we know that smart investors have taken advantage of this really well, the most famous being Warren Buffett, knowing the sentiments of the market when there's fear and greed, and he's made billions out of that. The other way of going directly and purchasing the property or infrastructure or companies is that you're not vulnerable to those daily fluctuations in the sentiment of the market. And that's good, because the most relevant valuation for when you own those is what you can get if you want to sell it at the time. It's a bit like owning investment property. You're not really interested in day-to-day valuation. You're interested in what you can get when you sell it. The downside of that is that we don't get daily valuations. And that's a challenge for a fund that needs to provide daily unit pricing for members. And it's mainly a challenge when there's a big dislocation of the listed market and then private assets. Private assets, to your question, get valued by professional valuers, specialists. They're usually on a panel and they get rotated. and usually quarterly or 6 monthly, depending on the size of the asset. But it relies on recent sales, partly relies on recent sales, and that's challenging when there's not a lot of sales to go by. And so super funds have received attention on this because how do they reflect the latest valuation? And there's a lot of work going on at the moment about that in terms of how do we set up a better policy to cater for that. And for those that really want to go into the weeds, there's what's called APRA's SBG 530, where the details are. And
we'll download the PDF and put it on the blog post.
Get into it.
For anyone who wants to find out all the details.
Exactly. And that's going to, the detail on that's about to land on how super funds are going to have to navigate that.
So as far as superannuation goes, it's a reasonable thing for people to think that super's my money. Why shouldn't I be able to access it when I'm younger and maybe to buy a property, for example?
Yeah, I mean, I know it's can be frustrating. That's one of the frustrating aspects.
It's sitting there.
It's sitting there.
You're sweating on it.
You can see the account balance when you get a statement, and you want to buy a property. No, I understand that for sure. I mean, actually, it's good to give, in answering this, it's good to give context. The way I see that we've got three main financial objectives. One is to cover the now. So, obviously eating and living and purchasing a house or renting a property. We've also got the future, so we need to plan for that. And that also, part of that includes retirement. And then there's a third, which is planning for the unexpected. So we need to have a plan, for instance, if we can't work due to illness or injury. And of course, the only relevant goal seems covering now. But we need to think of the other two because at some stage they do happen. And if you're not prepared, there's a lot of pain involved. So we need to balance between all three. Now, super was set up for that future goal. That was the original objective. Actually, there was recognition about the future demographics and that we need to get people putting away for retirement because of all these, what I spoke about before, the challenge of retirement. And so inevitably, because of that process, you get this big pot of money and it's really tempting to access. But it was never designed for that purpose. And each goal has different tools. So housing in Australia has some real challenges. And the one of the big factors is the supply side. Releasing super for housing just increases the demand side, and it wouldn't be a solution to the problem.
Oh, okay. So there's an unintended consequence from that.
Yeah, and super is not the idea. Like you wouldn't if you're designing a solution for housing, it wouldn't be a super fund. There's better tools for that, but that doesn't stop the fact that it can be frustrating to see it there. But there is certainly upside in also having that money set aside for the future as well.
So the really big question is, why have all the brochures for retirees got them in white linen running down the beach?
Yeah, good.
Must research well or something.
Yeah, good question. I should ask you, Phil. I can't answer that one. That's out of my remit.
Oh, I just think that's it's just an image that would most probably stick with certain people of a certain demographic and a certain age, and it's like the dream. White linen denotes a dream in the future, doesn't it?
Walking along the beach, in the sun. No, it's a nice image anyway.
It is. It's a really nice image. So, just in general, you're pretty happy with the retirement system here in Australia, and that the future's bright for Australians, and we're not going to run out of money in the future.
Yeah, I mean, I think the super system is good. Probably more positive than people may realise. But as I mentioned earlier, it's important for people to sort of just falsely believe in it, but to recognise and have some trust in the system. As I said, there's no perfection, but it keeps improving. So it puts Australia in good stead. And one of the reference points to that is the fact that when I was travelling, everyone kept asking about our system.
When younger people are looking at their asset allocation in their super schemes, they often will tick conservative. What kind of advice would you... I mean, we can't give advice, obviously, on this podcast. It bears consideration for a younger person to start thinking about how aggressive their superannuation should be when they're looking at the long term.
Yeah, and this is general information. But, the general theory is that the longer you have to invest, the more growth assets, so, shares and property and infrastructure and private equity that you can invest in. Now, the super funds recognise this, and so they develop what's called the My Super, so the default option, which is really set up generally for people with that longer term horizon. And so the best thing to be doing if you're uncertain is to be checking with your super fund and
talk to them about about what your goals are and what you need to do and what your time horizon is. Yeah,
that's right. And there's a lot of information on the website, sometimes calculators to help you manage that. And if that's not helpful, then the call center as well. But it is important to get that right, to be investing in the right, because it's over so many years.
I think a lot of people, though, they don't even think about the super, and where it's really worthwhile to be proactive to see how that money is being invested on your behalf.
Yeah, I mean, that's right. So doing it right over many years really makes a difference. And I mean, this is a bit naff, but, mentioning the book I wrote, I mean, that was part of the reason for writing it, is to help people navigate this, the whole topic of super and investing outside of super, knowing it is challenging, particularly when you're busy and you've got other things. There's more exciting things to do. And the book is really structured to help people understand the systems in Australia, how to understand them, how to use them for your own advantage, so that you can be well set up.
So now that you have brought up the book, tell us the name and where people can find more information.
Yeah, I mean, well, the book's so it's called Mission Possible: 4 Steps to Financial Independence on Any Income. Available at the usual sites. Also, there is a website for the book, so missionpossiblebook.com.au, and there's a discount there for anyone that wants a discounted signed copy. Just put in early discount, one word. And that's available. But really, set up to help people navigate this topic, because I know it's not an easy topic to navigate.
David Scollon, thank you very much for joining me again today.
Thanks, Phil. Thanks for having me.
Thanks for listening to Shares for Beginners. You can find more at sharesforbeginners.com. If you enjoy listening, please take a moment to rate or review in your podcast player, or tell a friend who might want to learn more about investing for their future.
At Staples Business Advantage, our experts can help you find furniture that fits any design and budget, while AI can
recommend products based on preferences, generate 3D models for visualization, and optimize space planning for office furniture.
Take advantage of our team's eye for style and design.
And my eye for, wait, I have no eyes. Only algorithms.
Let Staples Business Advantage use today's latest innovations plus our team's experience to make furnishing an office space easier for you.
Sign up today and save 20%.
Staples Business Advantage.
Business is
human.